Welcome to Framework Fortune. I'm your host Ben, and today we're going to talk about trend lines, what they are, how to spot them, and how to trade them. So if you're new to the channel and you want to learn more about day trading, swing trading, investing, all of that, be sure to hit that subscribe button. And to my returning subscribers, let's teach that dirty algorithm a lesson and smash that like button. So let's dive into it. First, what is a trend line? Well, on the screen I'm going to show you the technical definition and then we'll explain it in a much easier way. But a trend line is a line drawn over pivot highs or under pivot lows to show the prevailing direction of price. Trend lines are visual representation of support and resistance in any time frame. They show direction and speed of price and also describe patterns during periods of price contraction. So it sounds like a whole mouthful, but basically it's going to show you the direction that the stock is going and let you know when the direction is going to change. Now, not every stock is really going to have trend lines, but majority of them will, and you can trade trend lines on any time frame, just like it said. So you can trade them on a 2-minute chart, 5-minute chart, 15-minute chart, 4-hour chart. If you're a swing trader, you can swing trade trend lines on the daily chart. And this also will apply to every type of investment there is. So you can use trend lines with stocks. You can use them with cryptos. You can use them with gold and silver price charts. Doesn't matter. It's a universal way to trade. And a lot of traders have adopted it and put it in their arsenal. It's definitely in mine. Right here, you can see that today I traded this in the live stream, INVO. Well, I didn't get into it until right here. Now, why would I do that? Because there's a trend line. So, how do we find the trend line? Well, we want connecting pivot points. And a pivot point is going to be an area where the stock changes directions. And when the pivot points align like this, you get a trend line. So we could see the price was shooting up. It got rejected in this little resistance area. It came back down, little sell-off. Hit right here. Started coming back up again. And then the next candle hit right here and started coming back up. And you could see that trend line forming at that point. So that's when I got in this, and then it ended up ripping to 1230. So I got in around 920-ish and then ended up selling somewhere in this candle when it started dropping after it hit that new high a day. And if we extend the trend line, we can see it bounced off again right there, but then sellers come in and pushed it down. So that was kind of our pivot point right there for resistance, as all three of these candles tried to come up and hit that. Now these two didn't quite get there, but you can see the selling pressure pushed it down below that trend line, and when it did, you started getting a sell-off. So the direction changed. So you can trade these trend lines once you spot them, as long as the direction is in your favor. And you don't just have to trade them to the long side. You can use this long side trend line to actually short. So when you see the price coming up there, hits this resistance line, hits again, and then as soon as it cracks below that trend line, it's a good probability it's going to sell off, because other shorters are going to see that and they're going to start shorting too. And so you could short all the way down to that $9 support area, because that area was some support before and it was also resistance before. So you can see back here where it was resistance, hit there when it broke above, came back down, held up 9, then opened up below 9, got rejected, and then this one broke back above. So that old resistance and a little bit of support end up being support back here, so you could cover there. Now when trading these, a very easy way to trade these is once you buy on the trend line, you could put one of the trailing stops. And if you haven't seen that video, I have a guide on the different order types and how to use them. But if you use a trailing stop and say you get in right here at that $9 area, around where I got in, and put your trailing stop below the trend line. As this climbs up, your trailing stop is going to follow. And then when it gets rejected up here and drops back down, whatever price you put that trailing stop loss at is going to get hit, so you're going to be out in the profit. Now you could also just put a sell order in, a little stop loss, and just drag it up as the trend line's climbing. And then when the trend line starts to crack, by the time you've drug your stop loss order all the way up to here, and you got in at $9 and you want to keep holding because you want to see if it's going to keep climbing, well, when your stop loss is right there, you're still going to be in the profit when it does crack this trend line. And then vice versa with shorting. If you're coming in here to short because the trend line is cracking, you just put your stop loss above the trend line to cover if it does start to pop back above the trend line, because sometimes the stock will drop a little bit below the trend line and then get back on track and keep moving up. Most of the time though, when the trend line cracks like this, there's going to be a sell-off. Now we're going to look at a couple of other stocks and point out the trend lines and look at where our entries and exits could have been. So this is XELA. And this is zoomed out. This is on the 5-minute chart, but let's go right over here at the start of the day. So we see this start to run up. Now you can see there was a very steep trend line, and very steep trend lines like this usually are going to have a sell-off at some point. This is a big upward movement, and you got to expect selling to come. But if you miss this entry right here after pre-market, where you kind of got this little curl up, this little U-shape looking pattern there, if you miss this entry, well, you just let it run and wait for it to pull back to the trend line. So this one popped up, and then when this candle opened, it opened here and it sold off and dropped down, you could have tried to take an entry there, but you wouldn't really know if this trend line is forming yet. So when this pushes back up and this pushes back up, you just watch it push, and then you get this one here, this red candle dropping down to the trend line, and you see it held up the trend line after that selling pressure. Well, then you could have took an entry as it bounced off that trend line and got in around this 360 area, dropped your stop loss right around 350, and then rode this up the trend line to that 444 area. And then pull your stop loss up, or if you're using a trailing stop, you can see when the trend line cracks, then you start to have that little sell-off. Now that's a very steep trend line, so that's not going to be the best way to look at it, but you could trade it like that. But we look overall, look at the pivot points that we have on this stock. So we have a really nice pivot point right here. And why is this a pivot point? Because that's a support area. You draw your support line right straight across there, and you can see how many times it bounced off of this area. When it finally caught up and you see it bounce right there off of that support, then you can connect to make that trend line. You want to have candles that are clearly bouncing off of a certain price area to connect to the trend line. Now, you can also use trend lines for downtrend breaks. So what do I mean by that? We've ran up here. We've hit a little top right here. We made another little top right there, so little pivot points. This top was lower. This top was lower. So we draw our line and connect those tops. So you see the downtrend and you just wait, you wait, and then you see it start to break and you hop in at that break, and then you can get a nice move up. So you can use them to the upside, you can use them to the downside, and you can use them for going long or shorting. So let's take a look at GameStop today. So we can see GameStop had some resistance back in this area. We'll take that off there. But if you look at these pivot points, this first candle opened up and ended up dropping down right here. So you can see this was support in pre-market. It was resistance right there for a minute. It broke above, came down, bounced off. So when it came down again, it bounced off that support area. So we know that is a support area, and that could be a pivot area because the stock direction changed, right? So you wouldn't want to get in it yet because you don't really have a pattern or anything. but you're waiting for another pivot point to come down to be able to match your trend line too. So still, this would still be too early, and you're just waiting, and then it drops down there. Once you see that trend line's held up, you could take a position and hold it all the way up to this area, or even over here if you were looking for it to continue to hold up, because you got the movement up, and then you start to see this sell off. As long as the trend line holds, then you don't have to sell it, and you can hold it for a little bit more gain. Once it cracks, you come in there and short it there and get a nice little short position and make a little profit there as well. But let's scale back a little bit. So this is the last 2 days of GameStop, and we see a little pivot point there, pivot point there. There's that pivot point. So if we draw this trend line off of those pivot points, yesterday you could have seen this pivot point hold up, took a swing trade position here, and then end up holding it all the way up to 257 today with a good till canceled order in after hours, a stop loss just in case it dropped overnight. And then if it doesn't, you can get all of this gain on a swing trade because you're just holding as long as the trend line holds. But you want to enter near the trend line. You don't want to wait for it to bounce off the trend line right here and wait for it to come way up here, because then you're off of the trend line. And what you're going to constantly see is the stock price will pull back to that trend line. So this is basically slope and support. The support is continually gradually pushing up, and this is also the price action telling you that the price is moving in an upward direction until that direction changes. So let's look at a couple of more stocks. So SINT, this one is such an easy trend line to see. You can see all these pivot points all the way up. So very easy to connect this trend line. And then you could have just played this. You see the initial run up, comes down, bounces there. So you got that pivot point. And you say, oh, okay, we're starting to possibly form a trend line here and take an entry there and then hold it up. Or you could wait till it bounces again off this trend line. But you can see every time it came down, it bounced off all the way up into after hours. So let's take a look at the Bitcoin futures chart. And this is Bitcoin. You can see the price. And this is the daily chart. And what do you see on this daily chart? Do you see some pivot points that connect? Yes, we do. Right? So we can connect them there. And you can see that Bitcoin is off a decent ways of the trend line. But if you're watching, if you're looking for the long term or a longer hold, you can see it run up, run up, run up, and then it drops back down, and we get this pivot point. And then when you see that hold up and you can confirm this trend line, then you could have took an entry right here in this 33,000 area, and then you just hold as long as the trend line's holding, and you'd be holding all the way up to 57,000. And then you can also use the downtrend break as well on Bitcoin. You can see we hit this top up here, started trending down, and then as soon as it broke over, you get this nice rip up. So either way you want to use them, they work the same way, and most of the time they're going to be pretty accurate. So if we look here on the Bitcoin 5-minute chart, you can see trend line right there. So if you was looking for a small swing trade, and if we even extend this back even further, you can see, okay, we were selling off right here. We're selling, we're in this downtrend, we're in this downtrend. The stock started bouncing, broke above the downtrend. So now you could take an entry if you wanted to and get this nice gap up for a swing trade. Or, you know the downtrend is broken, you just wait for it to come back down to the trend line. And once it came back down to the trend line, you could have took an entry there at that 49,000, and you could still be holding this all the way up to 55,000. So it doesn't matter what investment it is. If it can be charted with candlesticks or line graphs or whatever, trend lines are going to be a great tool no matter what types of trades you are making. And the saying goes, the trend is your friend. So remember that, the trend is your friend. If you go against a trend line, you're most likely going to lose. So that's it for trend lines. It's something that needs to be in every trader's arsenal, no matter what you're doing and what you're trading and what your strategy is. They're going to help you see that price action better and be able to get better entries and exits. So if you learned something new in this video, be sure to smash that like button. I'm your host Ben. You've been watching Framework Fortune.